Let's check the markets. We are rallying yet again across the board, and we're trying to get back to 49.5 on the Dow. S&P is back above 6,900 as well, so you have a pretty good start, and there's the Russell. And that's been a huge story so far this year. And if you look at the markets today and you look at the markets yesterday, it is almost as if Tuesday's Trump tariff tantrum, the sequel, never happened. The S&P was at 69.40 before that big decline on Tuesday. It hit about 69.30 today, intraday high. We're a little bit below that, obviously, now, but the Dow has turned positive for the week. We have a framework, in quotes, whatever that is, we don't know. But it's good enough for the markets to look like they do over the last 2 days. This sizable rebound. What do you make of this?
Yeah, so I was on the show very quickly after that series of Greenland-related Truth Social posts, and my comment was like, haven't we been doing this for 15 years? Do you honestly need to be told, don't react to the first tweet, or maybe even the second? Just like take a beat and let the market digest. It's mostly algos trading that stuff. Why would you join the algos? They're playing a different game than you. That turns out to have been sage advice. The S&P 600 small cap index is the bell of the ball year to date, up 8% versus just 0.5% for the S&P 500. I absolutely love this tape. I know Jenny does. I know Jim does, because it has nothing to do with data centers. Literally nothing. What's happening this year is really exciting. You've got transports in the lead. When was the last time we've been able to say that? You've got the small cap trade working, which touches a whole host of sectors that, again, are not data center related. And you still have semis doing well. And now you have energy has decided to wake up. And again, a lot of these were areas that were left behind last year. A lot of them are underowned. A lot of them are lower multiple, have tons of room to run. And that's without even knowing what the earnings will be in Q4. They haven't even reported yet.
Right.
But the multiple is lifting because people are looking elsewhere from Oracle and Microsoft. They want to do something else.
It is January 22nd, and the Russell 2000 is up 10% year to date. That's unbelievable. The transports, which Josh was talking about, which Ed Yardeni is writing about today, by the way, he'll join us on Closing Bell today, so you'll hear more from him on his outlook for the markets. Only 4% away from its previous high, which was on March 30th of 2022. If you believe, of course, in Dow theory, then this transports breakout is very significant. This is, in many respects, what it was last week. The idea of a run-it-hot economy. That's why we asked you, and we talked about, in the face of that big decline on Tuesday, whether you should ignore the noise and focus on the fundamentals. The fundamentals that David Solomon, who runs Goldman Sachs and was with our Squawk Box team in Davos this morning, said are this.
I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. We're set up for that. That might not happen. A bunch of exogenous things could soften it, but I think we're set up with a better possibility for that than we've had in quite some time.
That seems to be the view. Charlie Scharf, CEO Wells Fargo, says the same. It's more likely than not that growth will be stronger than people expect, which is why the sector sort looks like this. Materials up 9.25% to start the year. Energy up 9%. Industrials up 7%. It coincides with what the Russell, Jenny, is doing as well as the run it hot and tune out the noise continues.
Right. So to Josh's point before, yeah, I'm loving this market this year. It's a lot of fun, but I look at it cautiously too. And so if we're going to go back to the beginning of your comments, Scott, and focus on transports, I just think it's interesting because when I look at our transport holdings, we've got JetBlue, XPO, Uber, and UPS. None of those companies have anything actually in common with them, with each other, other than maybe that oil, gasoline is a large input cost. And so really I look at it as a much broader market rotation.
Well, they do have something in common. They're all reliant on a good economy.
Fair
a good
enough.
economy,
Okay.
And even better than what people thought, like the Solomon Scharf perspective, helps a UPS, it helps an Uber, it helps a JetBlue, and it helps XPO.
But you know what? We had a great economy last year, and those guys totally
We're going
lagged.
to have better growth than we did.
Okay. Point is, they completely lagged last year. So even with a good economy, and they do need that, They did nothing last year. So this is just more to me like a comment on market rotation, a comment on people changing their positioning. It's interesting. I mean, you take like a UPS, for example, right? It's down 17% over the last 12 months. It's up 11% year to date. And you look out on that, and okay, it trades at 15 times earnings, but the earnings growth for UPS isn't amazing. It's just not terrible. And it's in the middle of a transition. People are finally giving the middle of a transition some like positive hope rather than you're not AI centric, we're ignoring you. So it's just this kind of like thematic thing that I'm seeing across the portfolio, across the market. To me, it's encouraging. I like the breadth. Everyone does well if it's a positive economy. It's nice to see these guys participate.
Yeah. Care. We're at 49,500 on the Dow. So again, we said we're back positive on the year. And we haven't gotten everything back from Tuesday, but we are working our way with it, towards that direction.
So here's a comment that I think is relevant to a discussion of indices. The S&P has 40% weight in a handful of big cap tech names, tech and communication service names. One of them, NVIDIA alone, which is as large in terms of market cap of the 300 smallest names in the S&P 500. If you go from number 201 to 500, all of them fit into NVIDIA. So those $8 trillion worth of market cap can move a lot if you get a few points that come out of Meta or Microsoft, which has been happening, or NVIDIA over the past few months. That can really push up hundreds of names that are outside of the $1 trillion or $100 billion club, which is a great thing for people who have broadened their investments, have diversified their portfolio, like the people on this desk. What you might find is that the S&P does very little this year, but these other indices do a lot. They can be double digits, they could be up 20%, and you could have the S&P up 2%.
Don't you think it's interesting, Jim, if you look at over the last 12 months, okay? The Russell slightly beats everything. The Russell's up 18.6% over the last 12 months in this age and era of AI, where everything seemingly is about that, where that trade, for better or worse, has dominated a lot of the conversation and a lot of portfolios. But that's pretty remarkable when you think about that fact that over the last year, the Russell's up almost 19%, and it beats everything else.
Yep. And, Scott, and we all know that the market likes to anticipate. It always anticipates. So what is it anticipating? It's bluntly anticipating much better growth in earnings from small caps. And, by the way, the other 493 stocks outside of the Mag 7, much better growth rates than we've seen over the last 3 years. And, frankly, we're going to see a deceleration of the AI stocks' earnings growth rates. That's the signal. You talked earlier about noise. There's a lot of noise out there. For fundamental investors, earnings is the signal. Now, I'm not saying, by the way, that the AI stocks are going to have lousy earnings, but if you take a look, just as an example, at Alphabet, it more than doubled its net income and earnings per share over the last 3 years. It's really hard to keep that pace of growth going. So it and the rest of the AI stocks may do 15 to 20% earnings growth this year, but guess what? The other sectors, financials, industrials, maybe even energy, are starting to pick up to match that in the projections by the second half of this year. And that, Scott, is why I think the small cap sector, and by the way, the RSP also, is outperforming.